Stung by the slowdown in corporate credit growth and rising bad loans, private banks are placing a larger emphasis on retail credit. Medium-sized banks like Yes Bank and IndusInd are trying to cut down their reliance on corporate credit. Anirudh Ghosh reports.
The general slowdown in the economy and its impact on corporate India's growth plans and repayment capacity has forced a number of private banks away from their reliance on corporate loans.
We are now finding that the consumer portfolio actually is behaving in terms of delinquency is much better. One, it is secured. Two, I think that it's a much more disciplined credit environment. The retail portfolio over the next 2-3 years will actually behave in terms of both its yields and its delinquency profile much better.
The percentage growth of the SME portfolio and the retail portfolio is going to outstrip corporate, mid-market and top-end portfolios going forward.
Medium-sized private banks like IndusInd Bank and Yes Bank have traditionally relied on a higher percentage of corporate loans on their books. But the recent downturn in economic activity has made retail lending a much safer and attractive proposition for them. Larger banks like HDFC Bank too are seeing better value in retail lending.
For this quarter, as I mentioned earlier, we are seeing faster growth on the retail side relative to the corporate business. We would see that if we were to achieve at the end of the year a certain overall loan growth which is a little ahead of the system, then I think the corporate loan growth may be a couple of percent lower than the overall loan growth that we see.
With high interest rates and commodity prices still hurting India Inc.'s expansion plans, industry watchers expect fresh corporate credit demand to remain muted in the near term. Till then, retail credit could be the main growth driver for the banking sector. Anirudh Ghosh and Mrinalini Krishna, ET Now, Mumbai.